Business News, where news for business people.
Good morning. You're watching DayBreak on Bloomberg Quint, India's first digital live streaming business news service. I am Agam Akil, and here are the headlines. It's a muted start for Asian markets as the rally ebbs on Wall Street, and the US Supreme Court lets Donald Trump's travel ban come into effect for 6 countries. Britain and European Union fail to arrive at an agreement on Brexit as differences over Ireland remain. And Fitch Ratings cuts India's growth target for the current fiscal and the next, citing lower than anticipated growth in the second quarter. The Dow Jones Industrial Average notched a record closing high on Monday after the Senate narrowly passed a major tax bill over the weekend. And Bloomberg's Abigail Doolittle wraps up all the market action in this report.
Stocks finished mixed in Monday's Wall Street session. The Dow finished higher, in fact, finishing at a record high. But the S&P 500, after spending most of the day higher, finished fractionally lower. Often that's considered to be bearish. And the NASDAQ, the tech-heavy NASDAQ, finished down more than 1%. So not surprisingly, tech was the big drag on the day as we're starting to see a continued rotation out of technology shares. Some of the big laggards today included Facebook down 2%, Microsoft down nearly 4%, Alphabet down more than 1%. This has been a hot sector on the year, so it appears that some investors are taking profits. Plus, some of these companies have lower tax rates. So if a tax reform bill is finally passed at some point, these companies are less likely to benefit. So it seems as though that is causing, to some degree, again, a rotation out of tech into some of the more value-oriented sectors, such as the financials. But healthcare, that was another sector that was weak on the day, and a big news there. CVS has agreed to buy Aetna for $69 billion. Both of those shares finishing lower, though. Lots of skepticism as to whether or not it really goes through, especially around regulation. However, where we did have 2 stocks finishing higher around potential deal talk, both Disney and 21st Century Fox finished higher on the possibility that Disney may acquire some of Fox's assets, especially the Sky assets plus the film studio assets. But with that reversal, especially for the S&P 500 on the close, some of the Haven assets coming off the lows, the close in Monday's Wall Street session perhaps foreshadowing some volatility, even some bearish action for the week ahead. In New York, Abigail Doolittle, Bloomberg News.
And the Supreme Court on Monday allowed the Trump administration to fully enforce a ban on travel to the United States by presidents of 6 mostly Muslim countries. Joe Sobczyk of Bloomberg News wraps up in this report.
Well, it's something of a technical win, but it is nonetheless a political win for the president. This is something that he's hammered on to his supporters and others, that the courts are wrong, that his travel ban was legal, and this was a big campaign promise of his. So it'll proceed through. It gives him some another piece of another victory that he can tout along with the tax bill in the House and the Senate. Presumably that will go through as well. There maybe a few more shoes to drop on this. Some legal challenges still remain, but for now, it's something that the president can proudly proclaim he's going ahead with what he promised.
And the United Kingdom and the European Union have failed to agree on terms for Brexit after a meeting between the British Prime Minister Theresa May and European Commission President Jean-Claude Juncker in Brussels yesterday. Nina Schick, Associate Director at Hanbury Strategy, wraps up in this report.
Yes, indeed. It's proven to be a very, very contentious issue in the divorce part of the talks. And that is, of course, because once the UK will leave the EU, it's said it's going to leave the customs union and the single market. And then the question lies, well, then at the external border of the EU, which we at the Republic of Ireland, there'll have to be a hard border with Northern Ireland. Now, this is unacceptable to all parties in the talks. It's not acceptable to Dublin, it's not acceptable to Belfast, and it's not acceptable to London. So the question then is, how do you fudge this? And the careful wording that they'd been preparing for today was that they would agree that Northern Ireland would somehow regulatorily be closely aligned to Ireland and the EU, so it's not in the customs union, but close to the customs union. And the DUP in the last minute said that this was unacceptable to the DUP because it would mean that it would be setting itself on a different course from the rest of the UK. But I think that they have proven to be quite pragmatic. They're probably using this as a negotiating tactic, and Theresa May will desperately be trying to talk to her allies and who are propping up her government in Parliament to get them to agree to really push those talks forward for next week, because that's when it's really crunch time.
And the strength in the US market is starting to ebb away, and that is also showing its impact on Asian markets. So let's take a look at how some of these indices have opened. Starting off with Nikkei, as you can see, it's down by as much as 0.7%. Currently still standing at around 22,545. We will be watching out for those indices as well as many other Asian indices which will open soon. But that said, let's also take a look at how the Indian markets have panned out yesterday and what we can expect today. We have Darshan Mehta of Bloomberg Quint joining us to take us through that. Darshan, good morning.
Good morning, Agam. Not the best of cues because most of the Asian markets are down in trade. The SGX Nifty is indicating a big downtick, so it's up 41. It's down 41 points. At one point of time, it was down almost close to 60 points, so has recovered significantly from the lows of the day. But nevertheless, that's a big gap down opening that we can anticipate. Even the ADRs, if you're looking at it, the IT packs did well. So Infosys was up almost 2%. Tata Motors reacted positively, and Vedanta was up in trade. The big loser that was there was HDFC Bank, which was down almost 2%. So that's pretty much the ADR setup. As far as commodities are concerned, WTI dropped almost 1.5% overnight. Brent was down almost 2% overnight. The WTI still is managing to trade above the $57.50 barrel per mark. So it's not too many cues coming in from the crude side. Even it was very mixed as far as base metals were concerned on the LME. So some of them were up. So zinc was down almost 2%. Lead was down 1.5%. The other metals, nickel was up almost 0.8%, and tin was up almost 0.3%. Mixed closing that was there as far as base metal is concerned. COMEX copper is currently trading with a positive bias. Even if you're looking at what's happening with China, steel is up almost 0.6% in China. Aluminium is down 0.3%. The other base metals or commodities are trading absolutely flat as far as China is concerned. Gold is trading flat today after dropping almost 0.4% overnight. So you're not getting any kind of cues that are coming in even from the commodity space. FI sold in almost 333 crores in the cash market. This is the FII provisional number that was there. DI has bought in almost 776 crores in the cash market. This is the actual number on the NSE. Now, if you're looking at what happened with the Nifty, it managed to recover from the lows of the day. It snapped its 4-day losing streak, but today it seems that it will open gap down. IT index was the best performing with gains of over 1%. It was up 1.22%, mainly led by Infosys. Media and metal were the other two indices which did well in trade. Now, the Nifty was up just 5 points. What contributed? Obviously, it was Infosys which contributed majority of the gains, 14 points coming in. Some of the other IT companies like HCL Tech contributing. TCS managed to contribute in the later half, but Reliance, HDFC Bank, Maruti Suzuki and Kotak were the major contributors on the downside for the Nifty. So overall, it seemed like the cues yesterday were rather muted. Morning cues are muted, and the SGX Nifty is indicating a big gap down opening today.
And mixed cues coming in from the F&O space as well. Yeah,
that's right, because call writers are becoming much more aggressive now. That is what we're seeing. Now, if you're looking at the Nifty yesterday, open interest build-up was 3% yesterday. Nifty ended absolutely flat in trade. As far as the Bank Nifty is concerned, similar case, Bank Nifty was down almost 0.5%, and fresh short positions were seen. You can see the open interest was up almost 13%. So that's the general cues that you're getting in as far as the Nifty and the Bank Nifty is concerned. The other cues that you need to watch out will be pretty much what's going on as far as open interest build-up is concerned, what the PCR is. The VIX was up. VIX is up almost 0.4%, so it was up inching close to to the 15 mark, so the risk is clearly there. Now, this is the open interest change. What happened? Look at what is happening. These are the call writers. So 10,200, 300, 400, 500. This is the big resistance even on the option side, and put writers are looking now to defend the 10,200 mark in trade. Now, if this gets taken out, there could be significant amount of downside, and put writers are shedding positions here because the premiums are going up significantly. So that's what we are seeing here, that call writers are extremely aggressive. The PCR is also coming down because the fact that the bears are getting much more aggressive. Stock specific, Biocon saw open interest build up of 17%, the counter was up 15%. It was news based, but the traction seems to be extremely strong for Biocon. But interestingly, it's trading at a discount of 9 rupees to the spot. That was interesting, that you need to watch out for. And Just Dial yesterday was down 4%, open interest build up of 10%. Remember, HDFC Mutual Fund bought in 9 lakh shares in the counter yesterday, so probably will be active in trade. So these are the two important FNO counters you have to watch out for.
Absolutely, we will be watching out for whether or not there is a little bit of reversal or whether or not there's a continuation of trend in those two stocks. But let's also take a check on the rupee and the bond. We have Shraddha Babla joining us on the show. Good morning, Shraddha.
Morning, Agam. So yesterday, of course, the rupee strengthened against the dollar, reacting positively to the GDP and PMI data that was out earlier. So the rupee ended about 8 paise stronger to the dollar at 64.3737. As far as the dollar rupee forwards are concerned, they're trading flattish, even as traders will be watching out the RBI policy action on Wednesday, where most, of course, are expecting the RBI will be on hold. Meanwhile, Fitch has cut India's domestic growth forecast by 2 percentage points from 6.9% to 6.7%. So when it comes to the bond markets, yesterday the yield on the 10-year government bond rose 2 basis points to the highest level since September 2016. In fact, the yield briefly crossed the 7.1% mark in trade before settling at 7.08%. So when it comes to the bond traders, they will be watching out for RBI stance on liquidity management on Wednesday. So those are some of the things that the bond and currency markets will be looking out for.
Thanks for that, Shraddha. But moving on, when it comes to the global ratings agency Fitch, that has cut India's growth outlook in a release where Fitch has said that the pickup in GDP growth in the second quarter has been weaker than expected, and the cut in India's GDP growth forecast is to 6.7% for 2017-18 from 6.9% earlier. And the ratings agency has also cut the FY19 growth forecast to 7.3% from 7.4% estimated earlier. But shifting focus from currency to commodity markets, Jayesh Khilnani will give us all the details. Good morning, Jayesh.
Morning, Agam. Let me start off with the base metal space that actually saw some bit of softness come about after 1.5% surge on Friday. So the base metal index itself ended lower by about 0.4%, and the fall was actually led by zinc and lead, which declined 1 to 2% each respectively. Nickel was the only exception which saw some bit of uptick, but not by much, just about by 0.8% or so. If you look at the Shanghai Futures Exchange, the base metals are in fact trading with a mixed queue. So copper and steel are trading with a positive bias, while zinc and aluminium are trading negative. But mind you that all of these base metals are within the 1% range. Moving on to gold prices, we are seeing gold has actually declined after the Senate passed the Trump's corporate tax cut. So we are seeing about 1280 levels for gold. Another risk appetite, we understand that it has actually subsided after the Flynn report of the guilty plea. So some bit of action moving out of gold. Moving on to crude oil prices, we saw a sharp fall overnight by about 1.5%. So both WTI and Brent fell about 1.5%. Now, as per a Bloomberg survey, the crude production from OPEC will actually come in at a 6-month low. So we are expecting that the crude inventory will fall as much as 2.5 million barrels for last week. That is as per a Bloomberg survey. So mixed cues coming in from the entire commodity space.
Thanks for that, Jayesh. We'll be watching out for those commodities as well. But moving on to an interesting development, the extradition trial of Vijay Mallya began yesterday at Westminster Magistrates Court. And Mallya, who is on a £650,000 bail, was arrested in London in April after a consortium of 17 banks accused him of willfully defaulting on more than 9,100 crores in debt accumulated by Kingfisher Airlines. The embattled liquor baron rejected Indian government's charge as false, fabricated and baseless, and the 61-year-old tycoon was greeted by a swarm of cameras and reporters when he entered the court for his trial. The trial is scheduled to end on December 14. And Susie Ring of Bloomberg News, who's tracking Mallya's case, files this report from London. Susie, thanks for joining us. Can you run us through the happenings of the day, or the first day of Mallya's trial proceedings?
So today was the first day of Vijay Mallya's extradition hearing. It started with a brief interruption when the court was evacuated, and Mallya had to stand outside while being mobbed by lots of press while we waited to re-enter the building. When we got going, the prosecution set out their case, which effectively is that Mr. Mallya has misappropriated about $1.4 billion from loans that he took from Aviation Bank for his Kingfisher Airlines company. He contests this and says in court documents that the government is conspiring against him, effectively to make him in face of the ills of capitalism, his lawyer said in court documents, and he will be putting forward that argument from tomorrow afternoon, most likely, for about 5 or 6 days over this week and next. He will also be calling on a number of expert witnesses, from banking to aviation witnesses, to try and support his argument.
So where do we go from here, Susie, and how long before we can expect a final judgment in this case?
And we should have a judgment most likely, possibly at the end of the year, but most likely early next year, because the magistrate will want to consider the evidence of both sides before making her judgment. Although either way, whoever the losing side is will most likely appeal, so it's going to be many months before Mr. Mallya would actually put onto a plane if he is extradited.
Thanks for that, Susie. To consider another point of view, senior advocate Majid Menon believes that Vijay Mallya is a very resourceful man, and hence India will have to have a strong enough evidence to win this battle against him. Listen in.
Vijay Mallya is a resourceful person, and therefore he will have no difficulty in hiring the best of the talents as far as the defense in extradition is concerned. He will have some best brains from India as also from UK, and therefore we should not underestimate or undermine the resistance to extradition, and therefore I think we as a country will have to be there to ensure that we have a foolproof case and a very strong enough evidence to persuade the UK courts to grant a positive order handing over this back to us.
Moving on to primary markets, multi-speciality hospital chain Shalby is looking to raise a little more than 500 crores from the primary markets, and the Ahmedabad-based company has 11 operational hospitals in India and 6 outpatient clinics abroad. Darshan Mehta is standing by to give us all the details on this IPO. Darshan.
Well, Agam, it's a combination of a fresh issue plus an OFS. So on the fresh issue side, it's a fresh issue of almost 480 crores, which will mean that shares of almost 1.93 to 1.95 crores will be sold depending on the price band. On the OFS, what the promoter is doing, Dr. Vikram Shah, he's selling in 10 lakh shares. So that actually comes out to almost 25 crores. So he's getting in 25 crores. So the entire issue size is close to 505 crores. The price band that they've given is 245 to 248. So the market cap post issue, let's take it on the higher scale, will be almost 2680 crores. Now the other part is that the issue opens today and ends after 2 days. Basically, it's an Ahmedabad based multi-speciality hospital with 11 operational hospitals and almost 2012 beds. What are the objectives of the issue? They have significant amount of debt. They want to reduce debt by almost 300 crores. The equipment capex that they have is close to 64 crores. The hospital infra is almost 11 crores, and the balance will be used for general corporate purposes. Now, as far as valuation is concerned, you value hospitals on an EV to EBITDA basis, given the fact that you should not do it on a PE basis. So on an EV to EBITDA basis, it's much more expensive. It's trading at 28 times FY18 numbers compared to an Apollo hospital, which is 23 times, Fortis, which is 20 times, Narayana, which is 27 times, and Healthcare, which is 23 times. So on that basis, it's trading at a much higher valuation. But remember, the ROA, ROE, as well as margin margins are much superior for the company compared to its peers. So that is something that you have to watch out for. They have already had their anchor investor book filled yesterday. They've allotted shares to some of the prominent investors, but it will be it's coming out at a difficult time when the markets are weak. But let's see how the IPO pans out now.
Absolutely, we will be watching out for those subscription numbers. But moving on, Sandur Manganese has reported a stellar set of numbers for the month, or rather for the quarter of September, and with almost threefold jump in profit numbers. Let's head across to Nikki Mirchandani, who's standing by to give us more details. Good morning, Nikki.
Hi Agam. So it's a third steady quarter for the company, solid set of numbers coming in from the company. If you see the revenue, that has jumped almost 88% in this quarter at a number of around 144 odd crore, and net profit, as you just mentioned, has jumped threefolds to a number of 28 crore as compared to 9 crore that we saw in the corresponding quarter. EBITDA, for that matter, that has also jumped by 3.5 folds or over 3.5 folds to a number of 43 crore. Margins have expanded, for that matter, at 30% as compared to a figure of nearly 15.7% that we saw in the corresponding quarter. Now, higher sales combined with your cost-saving techniques is what led to a good EBITDA performance for the company. If you see employee benefits, that as an expense to your net sales, they have come down to 16% from a figure of nearly 21%, and also other expenses, they have come down substantially too, to a number of around that portion of net sales comes down to 32% as compared to nearly 51% that we saw in the corresponding quarter. Besides that, other income has also risen 9%, which has led to a good show even on the bottom line front for the company. If you look at the revenue segment breakup, you would see a sharp uptake coming in both from mining as well as ferroalloys and power segment. A 79% to 89% jump is what we're looking at on year-on-year basis. Also, if you look at the EBIT breakup, for that matter, a good show on the mining side of the business, which is 85.83% jump. The number currently stands at 47.63 crore, which is a significant portion of your overall revenue. Just to give you a little brief about what the company is, it's the merchant miners of manganese ore and iron ore with a market capitalization of around 882 crore. The company is estimated to have reserves of 75.7 million ton of manganese ore. It produces low quality manganese ore with mineral content, and also notably it is a debt-free, cash-rich company which is sitting with cash equivalents of roughly 172 crore as of September 30, 2017. Agam.
Thanks for that, Nikki. But moving on, let's also take a look at all the other stocks which are in the news today and that could move the markets. Which we have Shraddha joining us back to give us a list. Good morning, Shraddha.
Morning, Agam. So, Bharat Forge and RK Forgings are two stocks that we will be watching out for on the back of North America Class 8 truck sales numbers that are out for the month of November and have grown about 68% on a year-on-year basis. On a month-on-month basis, that is as compared to the month of October, the sales are down about 9%. Bank of Maharashtra is another stock that we are tracking. Its QIP issue opened yesterday. Another float price has been set at 26.89 per share. That's about 3% premium to yesterday's closing price. So we could see some marginal positive reaction there. You also have Eros International PLC, which has announced a $100 million equity-linked financing. Now, this is the holding company of Eros International Media, which is listed in India. So we need to keep an eye out for that name as well. Good news for the company. They have said that they intend to use the net proceeds to repay some debts that are outstanding. You also have a Mint report, which is suggesting that the Kirloskar Group is in talks to sell a controlling stake in Kirloskar Oil Engines. In fact, they are said to be engaged in talks with few prospective buyers, which includes PE funds and also some strategic buyers, and the transaction, the Mint report says, is expected to fetch about $500 million. So watch out for that name. You have Tata Communications on the back of an ET report where they're saying that the company might invest close to 160 crores in the cloud business. And lastly, we're tracking Just Dial on the back of bulk deals where HDFC Mutual Fund bought 1.3% stake yesterday and Sequoia Capital sold 0.7% stake. So these are some of the stocks to watch out for, Agam.
Thanks, Shraddha. We'll also be watching out for some big brokerage calls today, and Somit Sarkar is standing by to give us those. Somit, is Aviation also on your list?
Yeah, Aviation is the only one on my list today. So HSBC is saying that the aviation industry is on a point of a strong recovery. The future looks highly profitable on the back of positive government policies, positive foreign exchange rates and modern fleets offsetting the rising crude prices, and especially the future looks more profitable for the low-cost carriers. And on the back of this, they have initiated coverage on Indigo with a buy rating and a target price of 1500. Now they're saying that Indigo will increase its market share by 5 percentage points by financial year 2021. They're saying that the cost of Indigo is already 15 to 30% lower when compared to peers, and modern fleets that will come in will reduce this cost further. They're expecting strong free cash flow generation to continue going forward, and they're expecting the net profit to grow at a compounded annual growth rate of 37% over FY17 to FY20. Lastly, best balance of market position, comparatively higher free cash flow and dividend yield, and the strongest balance sheet when compared to peers are the positive when it comes to Indigo. They have also initiated coverage on SpiceJet with a buy rating and a target price of 180. Now they're saying that the traffic would grow at a compounded annual growth rate of 18.5% for SpiceJet over FY17 to FY20. They're saying that the bulk order of 200 aircrafts that SpiceJet has given will help the company regain market share. They're saying that the company will be debt-free by financial year 2019, and they're expecting the company's net profit to grow at a compounded annual growth rate of 45% over FY17 to FY20. Lastly, they're saying that SpiceJet would grow at a faster rate when compared to its peers because of the new aircraft addition and because of its regional routes.
Thanks for that, Samit. But it's not just the Delhi government that's been trying to abate pollution levels of late. The Mayor of London has been tackling an air pollution problem back home since he took office in 2016 and has come up with a number of innovative solutions like T-charge, ultra-low emission zones and the like. Bloomberg Quint's Ayush Elavadi caught up with him to understand if Delhi can learn any lessons from the city of London. Here's what he had to say.
Well, I think we've got to be very careful, one city lecturing another city. This is a partnership approach, and there are challenges in Delhi, in London, in New York, in Mumbai around air quality. Actually, urbanization, people moving from villages to cities around the world is leading to complex issues. It's a fantastic thing in relation to bringing people together. And we've got to think innovatively about how we get more people living in confined spaces but not making the environment worse. So in London, we're doing things like making sure we encourage more people to walk, cycle and use public transport. We're also making sure the public transport is clean, not diesel, not petrol, but electric or hybrid or hydrogen. Delhi's doing some really exciting things as well. So I'm a firm believer in learning from each other. We're equal partners, and I go to Delhi in a spirit of fraternity and respect, and of course anything we can do to work together, I'm happy to do.
There's a lot to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. And there are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. India plans to overhaul its tax assessment and investigation process for the nation's top 500 companies as a part of Prime Minister Narendra Modi's endeavor to improve an ease of doing business and corruption. Well, Asia's third largest economy with people with knowledge of the matter said. And a $7.1 billion rail corridor in Rajasthan that's set to cut freight times between India's capital New Delhi and the business hub of Mumbai to 14 hours from 14 days is finally showing signs of progress. Well, that's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned to Bloomberg Quint.